Let's kick it off with Amazon,
Okay.
making waves over at CES. You say the money can still come in terms of profits.
The one big difference between Amazon today and Amazon 5, 10, 15, 20 years ago is that they've got this business called AWS, Amazon Web Services, the cloud business, which has got margins that are 10x greater than its core retail business. 25% margins, operating margins versus whatever that, 2.5%, 3%. And what that means is that they've got a lot more cash with which to make investments, and they're saying it quite loudly. We're going to make aggressive investments, but we believe we've reached a point of scale where we can do that and still run the business profitably. I think that cloud cushion, if you will, cloud cash cushion, allows them to do that.
It's one of your top picks for 2017
Yes.
in terms of investments. The FANGs overall, so adding Facebook to that, Netflix. Let's have a look at where potentially the FANGs could perform versus S&P. We've got a chart for you, and we saw last year, not so pretty. They did lag the S&P 500 overall as a benchmark. What about 2017?
So 2015 was the year of dramatic outperformance. It is rare, very rare, to see outperformance 2 years in a row, especially after that magnitude. That group of stocks rose over 80% in 2015. Going into 2016, frankly, up until the Trump election, the sector actually had outperformed, and then we've had this Trump rotation away from growth. I'm not sure how long that lasts. I fully respect that that's going to be a headwind for a while, but we think there's one or two really interesting stories in the large cap internet space and amongst the FANG names. First is Netflix. We think they can add more subs in both U.S. and international markets in 17 than in 16. If we're right on that, we think the stock goes higher. And secondly, Facebook. Facebook modestly outperformed the market this last year, but it's dramatically derated. The multiples come down a lot. It's at a point now, for the first time in 3 years, we think we can make money on the long side, both on estimates revisions, upwards estimates revisions, and on the multiple going up.
Just looking at the chart there, we saw that Facebook they actually performed in order of their letters. We had Facebook win, then Amazon, then Netflix, then Google was the laggard for 2016. But therefore, they can beat the overall market. Google, I want to dig into the laggard of 2016, because you say that actually finally some of their outside bets could actually bring in some money? Well,
so that would be a surprise. And when we say surprise, we think it's something that probably won't happen, but the odds are greater than the market ascribes to. Netflix is also, its multiple has come down because people have become very skeptical about the other bets. Where is the money coming out of autonomous vehicles? What about Nest and home automation? We haven't seen anything. Google Fiber has been cut back, and there's been some management changes amongst those bets. So the market has kind of tuned out that segment, and we think there's enough interesting bets that are put in there, enough people, and enough, when it comes to autonomous vehicles, there's probably one or two or three winners, and we think Google could be one of those. When is hard to know, but we think if any one of those bets starts to show any materiality at all, that would be the surprise for investors.
Talking of winners, and therefore let's shift it to losers, you actually think the market is too optimistic on the pain setter that is Twitter?
Boy, that stock has underperformed 2 years in a row. We think it could be the case again this year. It's our sell in the large cap space. And the street believes that there's going to be a reacceleration, even if modest, a reacceleration in growth this year.
Revenue could rise about 10%.
Yeah, and that could be a risk. We actually think there's a reasonable scenario under which revenues actually decline. This company literally goes X growth. We're not seeing it in terms of advertiser interest. I know President-elect Trump is interested in Twitter.
What do you call him?
President-elect Trump.
Yeah,
oh, the tweeter, yes.
What do you call it?
A tweeter-in-chief, I think is what we call
I love
that. But outside of him, we haven't seen major advertisers, fully embrace Twitter. And in fact, at the margin, they seem to be pulling away from it. That's a problem.
So Twitter, it doesn't look too pretty, despite the tweeter-in-chief, as you call him. A little bit more about the politics side of things, though, because you're saying this is still a bit of a concern when it comes to the FANG investment. But overall, maybe one of the surprise calls is that actually Trump doesn't change the tech outlook at all.
Well, so two things. One is there clearly has been a rotation towards new areas. I mean, this has been a very slow growth economy for a while. And so premium growth stocks like the FANG names, like the internet names, the high quality ones have outperformed. Now that the rest of the economic growth seems to be picking up, I get the point that there's less of a need to pay for premium for growth because there's growth in other parts of the economy. In terms of whether Trump would actually have an impact, President Trump would actually have an impact on the internet stocks, it's unlikely, but there's two areas that we watch out for. Net neutrality, changes there could negatively impact Netflix. And then this talk about these border adjustment taxes or putting taxes on changing how you would allocate costs to companies, that's something that could have material negative impact on Amazon. We don't think that's going to come to pass, but those are two watch areas for us.
And one outside bet just to leave us wowing with. It was a call last year and it didn't come to bear, but will Yelp get bought out this year?
You know, we like the company fundamentally. That said, we've also liked it for the last 2.5 years as a strategic asset. It's $2 to $3 billion. It's a great play off local advertising, albeit just in the U.S., and possibly local transactions. So we think there's a range of bidders out there, and we actually think now you've got a more willing seller than you did a year ago. And in order to have a sale, it takes two, and this time you finally got a seller that's willing to sell.